Thank you very much for the introduction, and good morning to everyone. I see that there's still some people walking in, but I'll start first. I have been reminded I have only 15 minutes, so good to say that I only have 10 slides, so I should be well within my KPI in terms of time. To start off is when I first saw the theme or the topic for discussion today is post-GST, the real impact on buyers. First thought was, what's the real impact? What about the impact? So I broke my presentation into two perspectives. One is the impact on buyers, and then after that, we'll go into a little bit more detail, especially talking a little bit more on GST, especially for the property market, so we can then discuss the real impact on the buyers. Okay, so the flow of my presentation. I'll start off with a broader outlook on the market trends and observations, more primary coming from the macroeconomic perspective. Then we look at GST in that perspective, and then after that go deeper into GST within the property industry, and then after that moving forward. I only have 10 slides, so very fast. But of course, we have to start with reminding ourselves what is GST. It is a new tax that has been implemented 1st of April. It is a multi-stage consumption tax on goods and services, levied on the supply of goods and services at each stage of the supply chain from the supplier up to the retail stage. Now, I'm quite sure a lot of you are very familiar with multi-level marketing. Yes? So in effect, the government has turned all of us into a multi-level tax collector on their behalf, right? So at every stage, if you're a GST registered person or a company, you will be collecting tax on the government behalf and then actually remitting it to them. At the same time, GST is a broad-based consumption tax where you only pay tax when you consume, covering all sectors of the economy, so including imports, but except for certain out-of-scope items which exclude exports. Okay, so there are various categories which I won't cover so much on. Now, if we are going to have GST, let's ask, is it a good thing? Why are we having GST? On the broader level, we are the second last country in this region to implement GST. So if we then now look at the rationale for the government, they are hoping obviously to broaden the tax base and reduce its exposure to a more cyclical fluctuations. Of course, GST is expected to generate about 23 billion in terms of revenue, and that was based on their early projection of getting about 300,000 GST-registered companies companies within the country. As I understand, as of today, they have about 380,000 registered already. Now, with the 23 billion, 5.6 billion is actually in excess, meaning that if we had stuck onto our sales and services tax and all that, we would have gotten perhaps about maybe 18 billion. So it is a way for the government to raise tax revenue, especially in times like that when oil prices are a little weaker and there is a very strong pressure for the government to balance their budget. As a whole in the economy, we need to have our broad indicators in place. If not, if we get downgraded, or it might trigger some a big cycle downwards, and that would not be good for everyone in the country. So hopefully, with all these collections from tax, it will be utilized effectively and productively to help promote the economy. Okay, helping the budget deficit of course 3.2. They have actually revised it a little bit higher due to the lower oil price. Earlier, government targeted 3%, but now 3.2. But still commendable if we can achieve it. Of course, putting additional tax revenue into development budget and also ensuring that exports are not impacted, because we would need export as well to help with our GDP growth. Now, as with any new implementation, whether it be GST or new regulations or anything new, there's always uncertainty. So if we look at what is the impact of GST, let's have a quick look. In October 2013 was the time when they announced that we will implement GST. We all think it is a good thing. but perhaps maybe manner of implementation, clarity, and things like that can still be improved. But when we announced at that point in time the market sentiment, just look at some broad economic parameters. At that point in time, we were looking at the next year having a growth of 5 to 5.5 in 2014, but we clocked up at 6% last year, GDP growth. Current account surplus to GDP then was 7.6%. Government budget deficit was 4. Of course, now we're looking at 3.2. Inflation 2 to 3. OPR low, very conducive, very accommodating. Then USD to ringgit was 315, and then of course crude oil price was US 100. April 1st this year, 18 months later, the economic sentiment today is slightly different. Now, if we had been enjoying better growth, perhaps the impact of GST may not be as large, for example. But now, the GST uncertainty has added on to our whole list of other uncertainties that we're facing overall as an economy. So it has just potentially made, okay, so can we say we have an impact? Yes. But is it the only impact? No. So it's not that major impact, but yes, it is playing. So if you ask me what is, yeah, there is the impact, but if we put in the context of it all, there are other things we will need to work on at the same time to ensure that the economy is actually on the right track of not diving down into a crisis or anything, but actually be able to sustain itself, especially when the world is also very volatile. Okay. On this note, actually, if you say market uncertainty has started, now let's look at then the property market. I know it's a bit small, but what I want to just highlight is looking at the trend. Okay, on the right, maybe I can see. These two charts are actually on Malaysian, residential and commercial. Over here is just Klang Valley, because I thought Klang Valley might be more relevant for everyone here. The main thing to share here is what you call the bar charts are actually reflective of volume of transactions, and obviously the line is actually on price. We have heard a lot from this morning's earlier speakers on how transaction is down and price. I just wanted to just do a bit more detailed analysis. Now, then you can see two colors in it. The bottom ones are actually primary transactions, and the others are, of course, secondary transactions. So what are the trends that we're seeing? In Malaysia overall, there is a drop in transactions and a rise in prices. There are, of course, many factors that could contribute. One could be primary market has shrunk. As you see, primary market transaction has shrunk. Maybe the supply has also been going down. So that could be one. Secondly, could also be, why is transaction going down and prices going up as an average? Is the strong locations are really going up. Right, from whether it be scarcity, and also, of course, people are now more discerning in terms of what they want to buy. So there is that trend. And similarly for commercial as well. Transaction coming down and prices going up. Of course, for Klang Valley too, these are all very similar. Now, what will GST do for this year's market? 2013, we know that the transactions have come down because there was the announcement of bank tightening rules. Oh, that's very fast. The tightening rules from the bank. And, and of course, that played an effect on it. Personally, I think it is quite good to have some form of tightening, because with the abundance of liquidity in the market, sometimes we can get carried away. With a little bit of tightening here and there, it actually brings us back to the ground to ensure there is no bubble and there will not be a deep dive down. What it forces developers to do is to be more productive and to actually put out products which are really demanded for. So, and I think if we could read the chart in such a way that if you give a very good product, actually price can go up still. Because if not, how do we explain? Of course, interest rate is low. The overall sentiment is accommodating. So now, in 2014 and 2015 now, it's a bit more uncertain. Will GST make a difference? That's where we will talk about in my second section. Okay. I also want to look a little bit on loans. We have covered a lot of it this morning, so I wouldn't go too much into it. But if you look at it, okay, just maybe we look at this loan here. These loans here are for the on a financial year basis. The trend is on the full year, calendar year. This one is just on the first 2 months, because I wanted to see how loans were reacting for the first 2 months of this year. So all these numbers are actually year on year 2 months, the first 2 months of each year, okay? Now, why don't we just use this chart? If you look at it in 2013, the blue line is loans applied for. Even though there was a tightening, there were more loans applied to. So signifying to us, actually, there is actually demand to buy. Of course, 2014 comes down. The red bar is actually loans approved, okay? Now, if you look at it on a percentage basis, obviously they're looking at, I can't even see, about the 50% kind of thing. So 2013, 2014, loans approved over loan applied is about 50%. But the interesting thing is, look at the absolute amount. The height of this chart is similar. That means even though the loans applied have come down and all that, or the percentage may have come up or down, the actual amount actually put out to the property market is still similar. I think overall the government, especially from the Bank Negara perspective as well, will not allow the property market to dip in any way because it will have multiplier negative effects overall on the economy. So depending on how we balance the tightening as well as interest rates, I think overall if we're able to still loan out that amount, that means the banks feel that these people are first credit-worthy. Secondly, what they are buying is a good product. Because I think currently, banks are also worried to loan if the product is, say, for example, very quiet, I mean, or a location which is still unknown. They would choose developers and products which are stronger and obviously give loans towards more credit-worthy purchases. Hence, the maybe also explaining the increase in the pricing of properties as well, overall, on an average basis. So what do we take out of this? And I think this is where, I think property, if you know, one of the questions we are here to answer is property still a good investment? Definitely yes, and I don't speak only from a developer's point of view, but I think you have to choose wisely and choose your properties where it's good. Now, price increasing is also a good thing. It is reflective then of the value of the property. One thing is, if there are certain locations where we keep having price increases, means that the people are staying and the rental is good. And these are the ones where they are well located and they are good products, and also I would say well integrated as well. So there, perhaps moving forward, there might be a bit of segmentation of the type of properties that will do very well that maybe do a bit mediocre, and then maybe some which might suffer a little bit. Okay, now, after talking about loans, and 2 times already the bell, let's go then into, that's the impact overall. Now let's look at the real impact. Actually, we were just talking to Datuk Som just now. If we talk about GST, we can last 3 days. There are still a lot of clarity both developers and perhaps buyers like you will need, and we are still working on that. So it's relatively new, but we will try our best to try and address maybe any concerns here. Going back down to, say, from a property developer point of view, as we develop properties, I just go down to 2 basic, residential and commercial, for simplicity. In residential, we all know it's an exempt supply. This just means that the developer cannot charge the GST to the buyer. It bears all the GST that they have to pay, that they now have to pay on like construction materials, their professional services, all the goods and services. For the commercial properties, it is a standard rated supply, so the developer is able to pass the GST to the buyer, and at the same time, input tax is then claimable. Now, just let me quickly go into just to be very clear, because I'm not sure whether everyone's very clear on what exempt and standard. I'll just go through on the 2. The standard rated supplies, which are applicable for commercial properties, of course, so every time you transact on a commercial property, you are meant to charge 6%. So for us as well, when we sell, we are meant to charge the 6%, and then obviously claim back on our input tax, which is what the tax that we paid on our inputs. This is claimable, so on the exempt is where it is not claimable. Now, what does it tell us about the property industry? In the exempt supply, which is actually for residential, the impact to the buyer is actually quite minimal because it's actually borne at the developer point of view. One could argue that prices can go up and down, but it is really all down to demand and supply as well. How good is the product? Are people coming to stay? Are people coming to do business in those properties and that location? So, if we go on a theoretical basis, it's actually minimal. Let's use Let's use an example. Okay, this is a very basic example. You may have more detailed questions, but I'll leave it for the panel discussion later. Now, if you have a residential property, okay, it's an exempt supply, so no GST. So if you buy, whether you be GST registered or non-GST registered, you don't have to pay, and then when you sell, you don't have to charge GST as well. But where it might become a bit different is at the bottom level, where your maintenance, for example, especially in a stratified development, service charges and sinking fund, they say there's no GST, meaning that if you are a condo, you live in the condo, you pay service charge and all that, you don't have to pay GST. However, when the JMB actually employs people to, say, clean the gardens, upkeep the common areas and all that, it is with GST, and because it's categorized as exempt, it has to be borne by the JMB. Now, there's a lot of, I think, clarity still needed, and also, but this is how we understand it as of today. But the main thing is, for us to now buy a residential property, actually, the thing is, there is no GST imposed on it. So perhaps that may or may not have explained the lack of rush to buy properties, in the last quarter of this year, or perhaps the uncertainty of GST has actually kept people to wait and see. Hence, there was no rush. But whatever it is, in this sense, I think theoretically, if we look at how it is done, actually the cost is borne at the developer level. Now, for commercial, it's slightly different because it is a standard rated. In commercial, we could look at ourselves, in developer, as a tax collector on behalf of the government. So because a commercial property has 6% GST imposed on it, and of course other third party like legal fees and all that has GST as well, you can be a non-GST registered person or a GST registered person. Now, if you are a non-GST registered person and you buy a property with GST on it, typically, the non-registered, the only thing what it means is that you cannot supply and you cannot claim input tax. So all in all, actually, in the commercial segment, it makes sense for you to be a GST registered person. A GST registered company or person just needs about 500,000 in revenue in 1 year. Now, there is also options if you don't earn that or you don't collect that, you can also opt to be a GST registered company. Why do you want to be a GST registered company? Because, say, for example, you buy a property from us, hopefully with 6%. Then after which you sell, you can actually pass that 6% on as well. So in itself, you also become a tax collector. You don't bear it. So the difference between residential, it stops really at the developer, where the developer has to bear. So the exempt is to benefit the residential buyers. Commercial, because they view it as business that's ongoing and they want to charge on goods and services that are produced and consumed for businesses. Hence, there is the GST. Of course, because it is a commercial property, service charges, maintenance costs, all of that bears GST as well. When we say bear GST, what does it mean? We have to collect the GST and pay it to government, but we also can claim back. The benefit of being registered is you're able to claim back when you buy supplies to say, use your commercial property and you are charged GST, you can claim that back as long as you have income coming in your GST registered company. Okay. So, of course, I would see that there will be many other questions relating to commercials. For example, those bought before GST was implemented versus if you buy after and things like that. But there will be quite a lot of discussions there, so I'll leave it for the discussions later. So, in summary, residential, the developers will be the one who will be experiencing some margin compression. So really pricing depends on supply and demand. But if you look on the bright side of things, it will actually drive developers to give better products. Service charges and all that are tax exempt, and JMC has to bear the GST, okay? The purchases for commercial will then bear GST, and they are like a tax collector, they can pass it on. Including every operating cost that they have, in maintenance and all. And so we would recommend that if you are in the commercial business to be registered, so they are able to benefit from the input tax claims. So just to end it off, regardless of all that, if GST is going to give us a little bit of an increase in cost, maybe even in maintenance-wise and all that, we would then look at properties which would give us returns higher than the increase in the cost. Hence, we have to look for, of course, good locations, good features, which are able to actually withstand the more longer period of time. On that note, I will end my presentation. It's very short, and perhaps maybe interact with you more during the panel discussion. Thank you.